The flat rate scheme is for UK small businesses that are VAT registered or going to be with turnover of less than 150 grand a year. It's designed to save you time with less paperwork, but can your business also save financially? If and how much money you will save using the flat rate scheme will depend on three things: your income, your expenditure, and your industry. We'll go through each of these and how you estimate what's best for you with our Google Sheets calculator. But first, I need to briefly explain how the VAT system works. If you're a business, you must register for VAT if your annual turnover is or is expected to be over 90k a year. Check this online if you're watching in the future, as thresholds do move. As a VAT registered business, you must add VAT onto your invoices and give that VAT you've collected to HMRC. VAT is a tax on most products and services. The standard rate is 20%, and there's a reduced rate of 5% and zero rate on some products. They're mostly related to food, children, charities, health, heating. Check online if you're unsure, but generally 20%. Right, now let's walk through how the VAT system works. I'm going to start off really simply. I sell a widget, the customer agrees to pay £100 plus 20% VAT. The customer gives me £120, I receive £120, but that £20 I've collected on behalf of the taxman, so I keep 100 and give HMRC £20. Okay, simple, right? But now imagine I'm the middle business. As a business, I also have to buy goods and services, and the manufacturer has a widget I want to buy. I buy that for £100 plus VAT. I give the other business £120. As you know, they have to give £20 to the taxman. I've spent 120. I then sell the widget on for £100 plus VAT. The customer gives me £120, and I give the taxman £20. But hang on, I've lost £20 and HMRC have gained twice. I can claim back my £20. I don't win or lose anything by selling it on. The taxman still gets his cut. Reclaiming the VAT avoids double taxation. You're still charged at point of sale, but you can reclaim any VAT at the end of the quarter. With the standard VAT scheme, you must collate all of your receipts, calculate how much VAT you've paid to other businesses, and claim this back. So what's the flat rate scheme? Instead of going through all of your receipts, you pay a fixed rate back to HMRC, which will depend on your industry. It's designed to save you time and admin, and almost definitely will. However, whether or not it will save you more money compared to the standard VAT scheme will depend on your total income, expenditure, and industry. Over to the calculator. And first, let's look at income. Let's assume your income is or is expected to be 25k a quarter, which is 100 grand a year. Input the net amount, so excluding tax. Remember, when earnings are above 90k, you need to be VAT registered. Less than, you need to check. And if you earn more than 150k, you are no longer eligible for the flat rate scheme. Assume you are selling to UK businesses and everything is 20% VAT. The tax and gross amount is calculated. If you are selling exempt or reduced rate goods, you'll need to update either the percentage VAT or the VAT amount. Next, expenditure. Enter the amount you spend on goods and services excluding VAT. Let's assume £1,000 for now. Separate capital expenditure on items that are over £2,000. CapEx are large purchases that are for use over a number of years, known as plant and machinery. This CapEx doesn't go into the final comparison, as you can claim it back in both systems, but it's here to remind you to separate it. Industry. The industry you are has a big impact. My business, it's mainly consultancy service, providing analytics on a time basis. My expenditure is pretty low, some tech, subscriptions, maybe stationery. Let's take a look at a second business, a locksmiths. They need to buy locks in order to fit them, so their expenses are higher and they have a lot more VAT to claim back. The flat rate scheme takes this into account by having a different rate depending on the industry. For my management consultancy, my flat rate is 14%. For the locksmiths, assuming they're under manufacturing not listed elsewhere, their rate will be 9.5%. It's worth checking your rate. It can change. You can see here how the rate has changed over the COVID years for hotels and pubs. There's a more detailed list here, which I'll provide the link for. You must also check if you are a limited cost business. You are a limited cost business if your purchases cost less than either 2% of your turnover or £1,000 a year, so less than £250 per quarter. If this is the case, doesn't matter what industry you're in, you must pay a higher rate of 16.5%. 16.5% compared to 20%? Still sounds like a win though, right? Unfortunately, not so much. The percentages are based on different amounts. Let's create a limited good business with expenditure of just £100. You sell 25 grand's worth of goods and services in a quarter, excluding VAT. You charge 20% VAT on that net amount, that 25k. The 16.5%, however, is based on that gross amount, the 30k, which is £4,950. So you'll be claiming back just £50. This is really important and easily misunderstood. I did for a while. You can't just compare 20% to 16.5%. To win financially using the standard VAT scheme, you only need to buy £250 of goods or services in the quarter, in which case that takes you out of a limited goods business, which means that if your expenses are low, there is very little money to be saved with either the flat rate or the standard rate VAT schemes. You can still save time, which we will look at later. What about the service and manufacturing businesses? For my management consultancy, let's keep the quarterly income as 25k. I buy some tech and other professional services. My expenses are pretty low though, at £2,000 a quarter. My flat rate is 14%. I'd pay HMRC back 4,200 instead of 5k. But what would it be with the standard VAT scheme? I would need to spend over £4,000 for the standard rate scheme to be the best financial option. What about our friends, the locksmiths? They've had to purchase the lock, but they've also had to pay for tools, petrol and other motor expenses to provide this service. Let's keep their income at 25k a quarter, but their expenses will be higher, say 10k a quarter. As HMRC understands that the cost in their industry is higher, their flat rate is lower at 9.5%. At 10k, there's not much in it. In fact, 11k or more a quarter than the standard rate would be better. Now, we really should discuss time savings, as this is what the scheme is actually designed for. For the standard scheme, I need to go through all the paper receipts and now the email receipts. And if you've got employees, you need to chase them. Then there's the lost or torn ones. It's a legal requirement to ensure they're eligible and accurately record the VAT paid. You may need to ask specifically for VAT receipt from some suppliers. I estimate it would take me about 4 hours every quarter to do all of this, and that's probably an understatement. Instead, with the flat rate scheme, I can bash it out within an hour. So that will save me at least 3 hours, and if I value my time at £100 an hour, that's £300 in savings per quarter, or 1,200 for the full year. So there you have it. How much you can save depends on your income. Generally, the more money you make, the more you can save with the flat rate, up to a maximum of 150k per year when you are no longer eligible for the flat rate scheme. The lower your expenses compared to the rest of your industry, the more likely you are to save with the flat rate. Until your expenses are so low, you are a limited cost business, where the savings are minimal, and your industry will determine your flat rate percentage. Got all that? Right, so Don't forget to think about your time savings though, as I'm sure you're very busy being a business owner. It's also probably worth mentioning you get a 1% discount on your first year, but do the right thing for you in the long term because that's very minimal savings. Hopefully, that helps you understand how much you can save and what's the best scheme for you. See in the description how to download the flat rate VAT calculator. It's a quick test to see which one could be the best for your business. It's not for VAT returns, it's just for comparing the schemes. If you're unsure, there's loads of information on gov.uk or talk to a qualified accountant. I'm not an accountant. I'm a business owner that wanted to understand this flat rate scheme better. Creating a spreadsheet, testing scenarios, and making a video has helped me, and hopefully it's helped you too. If it has, please share with other small business owners so that they can also see if they can save time and money. And I hope to see you again soon. Maybe watch a video that's being suggested right now. Cool. Thanks, guys. Bye. So really confusing how you got a standard VAT scheme and a standard VAT rate. So poor naming.